Hello, this is the Chart Profit video. Friday 30th of June, we're about an hour and 45 minutes into the trading day. This from the pre-open, looking at the E-mini S&P 6-week point of control, migrated up to 2436.50, this level here. Late last week we've been monitoring that level this week, price relative to that level being the key. As I said, that controlling price is the POC of a distribution that began about 6 weeks ago. Value area low of that distribution down here at the dotted line down at 24.15. Overnight on Tuesday that was actually briefly tested. We saw a rally throughout Wednesday. Said pre-open Wednesday that price acceptance, that's time, down around that level would be a negative. But on Wednesday during the session we rallied back above that point of control late in the session. However, on Thursday we opened just above it and then immediately sold off back below that level, and plenty of time was spent down here. If you see price being accepted down around the value area low, it should, if the distribution is still developing, it should reject a test, and price acceptance is an indication that maybe a new distribution has begun. In this case it would be lower. As I said pre-open today, we did actually bounce back. You can see there's a brief kind of probe in time below that level, and we did bounce back a bit. We came a little higher today. If you look at the live 30-minute chart, you can see that probe overnight on Wednesday just below that lower value area. That's absolutely fine. Rally back above the point of control, but then yesterday it's pretty negative price action. So here's that probe below that level. So longs, new longs eliminated for me unless we see significant buying marked preferably above here, the 6-week point of control. Look at the breadth chart through Thursday for New York. Bottom two indicators here actually managing to maintain good print relative to the important levels. So this bottom one, the bullish percent I call it, which is the percentage of stocks in my New York list printing above the 50-day moving average, is above 50, and here net new highs 25, 5-day moving average in black managing to hold above the 0 level. It manages to keep this bar in the middle here green, which is the breadth indicator. Our daily momentum indicator at the bottom here based on price, or the price oscillator, we noted that the indicator was heading lower, which means on the daily time frame a loss of momentum across this range here, and we've now just dipped into negative territory. So a bit mixed on the chart. Price momentum, you definitely want to see back above that 0 level, but breadth at the moment managing to maintain a positive green color. Have a look at the sentiment indicators. My version of the Ridex assets ratio yesterday was lower, 14.59. That was down slightly from Wednesday's ratio at 14.76, and this is underlined the highest reading I have in my database. The ratio reaching a new high has historically been a warning for the market. So bulls relative to bear assets in the Ridex ratio, indicating a very high level of enthusiasm for the market from the retail traders. This being a contrarian indicator, as I said, it's historically been a warning for the market. I've only seen the ratio above 14 twice before, once back over here early 2015, and once over here March the 1st this year. Both marked the point of a short-term correction. We obviously recovered from this one. Back over here we went into a long range after that and then headed lower briefly. Just zoom in on that a little, you can see the ratio currently above 14, which is extremely high. Anything I can say about the current reading, which is a little different from two previous readings, is that the participation or total assets is actually relatively low. We'll just break this down. This is the bear fund assets, which you can see close to historic low here, very low indeed. Bull fund assets in isolation here are not themselves at an extreme level. I mean, much higher over here and over here. So basically that's the difference. And you can see here, if I look at the total assets, these readings here were higher and higher over here. Problem is, I'm not sure if that's indicative of just the sentiment at the moment, a lack of conviction, or possibly the Ridex Group itself, with less assets under management, or possibly seeing the assets maybe distributed more widely amongst other funds that they've introduced that I'm not following, not sure. Look at the public poll anyway here from AAII. The Bulls percent was lower at 29.7% this week. Bears percent was also lower at 26.9%. So the Bears percent this week at a 25-week low. And here we're looking at the Lipper US fund flows data. They reported equity fund, including ETF outflows this week of 9.7 billion in the week to the 28th of June. That's a reasonable size outflow for a single week. Usually follow the 4-week flow number, which is here in black, and that's giving us a pretty neutral reading right now. Quick look at the current charts. This is the spider. Said last week that 243.40 was a key level. That's the 2-month point of control. Migrated there about a week ago, just before the webcast. So it was a key level coming into this week. Apart from a probe here above it earlier in the week, we are currently printing below that level. So much prefer to see price printing time above 243.40 for the spider. So this is currently weak price location. Russell 2000 ETF, IWM, important level is at 136, that's the 16-month. Small caps holding up relatively well this week, not far from the high actually. UK's FTSE 100 chart has a useful level here, the 5-month at 72.95. Price below that level would be weak price location. FTSE actually ending the week here on a low. Be interesting to see if this support holds if tested here at 72.95. This is TLT, the T-bond ETF. Got natural resistance on this chart up around 130, which is the halfway point off this high. I've said that anything printing above this level here, the 8-month down here at 121.63, so all of this price action here in the longer term, this is strong price location. Have seen a sell-off this week, got a little overbought earlier in the week up here when we hit the highest level since November. GLD, the gold ETF, currently printing time below 119.84, which is the major point of control. So this price action here is weak price location. Be much happy with gold if it was back above this level and printing time above that 119.84 level. US oil fund ETF had a bit of a rally this week. Trend is definitely down at the moment though. To my way of thinking, this chart can only move into a strong price location back above at minimum the 4-month at 10.28 up here, unless that point of control migrates lower, and I shall be monitoring that. Okay, this is the interesting chart this week. This is the dollar index. A couple of interesting things here. The 2-year support that we've been talking about for months is here at 95.57. I've been saying that this can act like a magnet, so we kind of expected a test, and we've just seen this test today. Possibility exists here for strong support, possibly a close below it and then a quick rejection would be an ideal. Maybe down at 95.34. I've got a kind of target down there just below 95.50. So that's a possibility early next week. But price printing time below that level would put the dollar index in a weak price location and suggest further weakness. If there is going to be a turn, this kind of price right now would be a good place to see it. As I say, lower would indicate lower still. That would be a speculative position. Safer still, 3-month, just earlier in the week, migrated to 97.28. So price back above there would be a safer position to anticipate higher prices. But let's see what happens. We'll obviously be monitoring the dollar index as a key chart going into next week. And interestingly, at the same time that's occurring, something interesting on the Euro FX chart. If we look at a 30-minute distribution back to 2014, you can see it here on the left. You can see the value area of that distribution here, with a value area low at this level and a value area high up here. If the distribution is developing, this value area high can be a level of resistance. Currently that's up around 114.17, which has just been probed. You can see that here on the current daily chart up here. this dotted, so this dashed line here representing the value area high. So potential for a turn here for the dollar. Obviously price acceptance up around this value area high would be, as I discussed earlier on a different chart, a bullish development rather than a quick rejection. And obviously if the dollar index breaks that support we just showed, both of these developments would indicate continuation of the current trend. You can actually show a similar distribution pattern on the pound dollar recently when we probed above the value area high. Very similar kind of pattern back in mid-May. Still a valid level, and you can see the pound has actually rallied strongly this week back to that point. We also noted recently on the dollar yen chart that the 12-month recently migrated to this level. This was in this period here just a few days ago, last week, to 111.30. So that's the 12-month, which is now support. So the dollar has actually moved, dollar yen has moved into a stronger position here on this chart. We're coming up to the end of the month, just to show some seasonal charts, or rather actually decennial pattern charts. So look at the 10-year cycle. This is a chart I showed about a month ago in late May, and it looked forward into June. This is kind of an idealized chart of June in a 7-year, which we're currently in 2017, and we looked for relative strength up to about the 19th, and then relative weakness down to the end of the month. We saw something like that, but not ideal. We had pretty much sideways market through to this point, which was in fact the 19th over here, and we have seen weakness down to the end of the month from that point. And we now move into July, or anticipating July. I've rebased all the Julys back over 9 decades on this chart. So we rebased them at the start of the month here to 100. That dotted line showing you where they end the month. 2 of these actually ended lower than they started. Most of them ended higher. So July in a 7-year in the decennial pattern, quite a strong month. And in my really basic way of calculating an average chart for the month, it looks like this. Okay, that concludes. Once again, I wish you a good weekend, and thank you for watching.